Well, as usual, this time of the week, I want to call on Robin Cross. He's with StoneX. He's in Chicago. He talks about our lumber market. And boy, that's been in the news a lot lately. Right off the top here, I want to give you kudos, Robin. I remember you and I spoke, gosh, I think it's been a few weeks ago, and you said to expect curtailments. And, you know, I saw headlines cross the wire here just a few days ago that indeed highlighted curtailments taking place across Canadian mills. Well, you pegged that one, and I just wondered what you see coming down the road now.
Thanks, Marlon. I really appreciate that, buddy. Thank you so much. Made me smile this morning. Well, let's get into it. So, good morning. Thank you for having me. First, let's start off with some prices. We got November lumber, which is now into the whole expiration phase. All eyes are on January with the we've been going under the front roll these past couple of weeks. So January is your leader of open interest. Sorry, I digress. But November's trading $489, down $790 with only 30 trades today. So that's noticeably quieter than it's been. We've actually had some really decent opening volume these past couple of weeks. So it's nice to kind of chill out here a little bit. January lumber's trading at $480. But like I said, is your now lead. That's down $990 with only 62 trades over there. Well, Marlon, even though we had those curtailments, we still have a lot of offsetting factors. All the data that came out just this week and last week, this is our fourth consecutive month of negative housing data. So you had new and existing home sales all down. Housing starts, building permits down, mortgage applications down, and interest rates obviously continue to climb. And by all outward appearances, I believe personally that that's still going to continue, especially with the Fed poised, and I believe and you might have to check my number on this, but I believe the Fed is poised to raise rates for the 8th time this year. Personally, I think they should kind of cool out and see how this action takes hold into the market as opposed, because you know what happens when you have the fear of interest rates continuing to rise, guys just sit on their hands. They're like, how higher is it going to go? I'm not going to do anything. So it really kind of gets in the psyche. So I think we got to let that work. And as a side note, they have raised rates in Canada 6 times, which is also a record. So that's something definitely to look out for. Well, with all this bad news, we got the market down to our swing low of 402 2 weeks ago, which would have been about 1,100 points off of this year's high. And then, we got the curtailments, so I figured that would give us a short covering rally, which it did. We bounced the sucker all the way from 402 to 542, so of a gain about 140 points. And at that time, the market was about $100 premium. So needless to say, buddy, that it did not last. The market literally within days of making that big premium got down to underlying cash. I have cash coming in around 470. Random Lengths print had come out this week, and this week's low was 470.90. So it was literally a perfect hedge. Sell the premium, buy it at convergence, and now you have the cheapest cash in town. So I do believe a lot of people took advantage of that, but and I don't believe it's necessarily over yet. I still think that with the upcoming November delivery, that it's going to have to take some cheap numbers for guys to really be interested into adding to their wood pile. So I don't think whatever I quoted you this morning, I don't think that's going to cut it. So we'll just have to see how that develops as the week goes. But the one thing I could say about futures is it continues to be completely tradable. Both bulls and bears, speculators and hedgers, the market has given trades on both sides ample opportunity to buy discounts and or sell premium. All you have to do is be patient. I know I tell you this a lot of times, and this is one of my favorite things to tell you. You get in where you fit in, right? And you just got to be patient. I think all eyes now being in January, it's going to be a much different picture than November. November, we usually put in our October seasonal lows for this contract, and then you get Christmas shutdowns, holiday trade, and more often than not, and I believe it was the tune of like 23 out of my 25 years, Jan catches a bid. And then what happens is once we get past the new year, we really see, okay, is it really worth all this hype we just built into it over Christmas? So that remains to be unseen. But I do believe that guys should be cautious. Don't try and press the market too hard under here, because I do believe if we sit down here longer, you will see further curtailments. I just don't see how they could run at these levels for very long. They definitely built some cash in the kitty from getting up to 1,400 this year, but you know how quickly that could go away. So I would still say be cautious, be cool, and wait for a discount to buy it and wait for a premium to sell it. I know that sounds really generic, but that's truly what the market's been giving you.
Well, good advice, and so far you've been pegging it almost every time we speak. You're very fortuitous information. So thanks again, Robin. We'll talk next week. Robin Cross of StoneX in Chicago. We'll take a break here, and we'll take a look at livestock next.